to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show, the show where we talk all things options trading and investing. My name is Cyprian Francis, and with me, as always, the main man of the hour or so, AJ Brown. Good morning, AJ.
Morning, Sip. How you doing today?
Doing good. Today is June 16th,
Yep.
Episode 85.
Options expiration day.
Right, triple witching. I kept heard
Yep.
that term, and
Quadruple.
Wow, maybe we could discuss what that actually means.
Sure.
But before we get into all that, the big news this week was the Fed, right? We've been waiting for this Fed decision, and we've got some economic news. And so what should we be, I feel like the market is reacting positively, but what are your thoughts on everything that's come out this week?
I mean, the Fed basically kicked the ball down the road. So the Fed didn't raise interest rates, which, as we know, that was pretty much what was expected. But then the Fed had a press conference, and we always know that the Fed words carry a ton of weight. And so what did the Fed say? The Fed said, this is not the end of interest rate hikes. We reserve the right to keep raising rates down the line. We're just going to go ahead and see what our record number of rate hikes, especially last year, are doing right now. Because it looks like they're having some effect. It's slow. Like if you take a look at the economic news, I'm pulling that up right now. If you take a look at the economic calendar, there we go. We had our consumer price index right as the Fed was starting to meet. So that's this guy right here. Consumer price index showed that we were slowing, but not slowing as much as the Fed would like. Then we had producers price index slowing a little bit faster. And then we had retail sales yesterday, as well as industrial production. All four of those are showing that we're slowing, just not slowing as fast as the Fed. Remember, the Fed raised rates at a record pace. I mean, literally 18 months ago, the Fed fund rate was at 0, and now it's up around 5.25%. And so in a short amount of time, the Fed really hiked things up. And so they wanted just as fast. But remember, inflation and deflation are as much about what's going on in the tribe, meaning everybody who's involved and who is a function of it. It's what's going on in their mind. Because if we think that inflation is there, we'll go back to our bosses and say there's inflation, we need more money in our paychecks. And companies, when they know that there's inflation out there, they will go ahead and take that opportunity to raise prices and make bigger profits. So inflation is kind of like this thing that is a self-fulfilling prophecy. And same with deflation. As soon as there's news that things are getting tight, people will stop borrowing money in order to buy houses, which tightens up. So again, it becomes this self-fulfilling prophecy, which is why the Fed's rhetoric is so important to us. And so pretty much we just kind of have to convince people that there's some slowing so that people slow. But remember, there's that whole adage that I just live by, which means the bull likes to trepidatiously climb up the stairs while the bear likes to jump out the window quite quickly. And when things get tight, it's human reaction to just pull back and stop all of a sudden. That's why whenever the Fed in the past has tried to control inflation, it usually leads to a recession, because it's not easy to get a soft landing because of this human psychological effect of when things turn bad, everybody coops up and snuggles up and gets in the fetal position under their covers. So is the Fed going to have a soft landing? It looks like, Sip, that investors are pretty content right now, but I think that you can kind of see in the behavior of the markets and individual symbols that there's some uncertainty and uncomfortableness out there. And I think people, corporations, big money investors, just all the way down to the little retail trader, they're all in the back of their mind thinking that there might be some sort of recession in our future. They're hoping not, but it looks like there might be.
And it's funny that you mentioned the soft landing, because that's a term that I continue to see in the news. And so what does that actually mean, soft landing? Like, if we look at the market, or like, what are we basing the softness on? Is it a combination of things?
So soft landing refers to the idea that the Fed can actually slow down the economy without making it go in reverse, right? So if it goes in reverse, it means that there's a recession. So the Fed is just trying to slow things down without actually having them contract. So right now, inflation somewhere around 4 to 5.5%, depending on how you're measuring it. They'd like to just simply slow it down to their target is 2%. But a lot of times when you tap on the brakes or something, inadvertently what happens is the wheels lock up, things come to a stop, and we actually start having a recession. We start shrinking rather than continuing to grow forward on a slower rate. So that's what a soft landing means. And like I said, it's human nature. These inflation and deflation is more of, and people forget this, but it's more of like a psychological condition. We create these self-fulfilling prophecies of growth and retraction. And so when you start giving hints and throw that little suggestion that deceleration is occurring, it could quickly pick up steam and become so decelerated that we go in reverse. It's like putting on the reverse thrusters in an airplane and hoping that you just slow things down rather than put them on so strong that the plane comes to a stop and starts actually going backwards.
Yeah, and it seems as if we're just in the slowing down phase, and the market is seeing that as a positive, right? Because our
Mm-hmm.
trend in the S&P over the last, I don't know, what is that, 2 months or so, is
Mm-hmm.
is heading in the right direction. And we've been discussing what's going to happen next, right? I think in our last week we talked about 4,600 on the S&P,
Mm-hmm.
heading into the summer with the summer doldrums.
Mm-hmm.
Has our opinion changed from last week based on this week's news?
No, in fact, I think I'm staying the course here. One thing we did this past week, and we do this rarely, but Trading Trainer in our subscriber area, in our secure web portal, we keep our own Trading Trainer bias on the markets, and we've actually bumped it up this week from neutral to right into the range, and it's right on the cusp of neutral to this neutral bullish range. So we have this range. In fact, I could probably bring that up so that folks and anybody who has access to our web portal, the free access. So all you have to do, folks, is come on over here to our web portal, and you can find that if you go to the Trading Trainer website. So I think you're seeing my screen. Yeah, you are. So if you go to the tradingtrainer.com website and you come up here, right here up at the top menu, and you click on, let me go ahead and tell my website
Click
that
on
I don't.
allow first, but hit the allow.
Right,
Yeah, hit the
right.
allow first.
Oh, yeah, and I hit cancel, but I want you guys to hit allow. I just hit cancel because I'm allowed, because I'm AJ. So right here, there's this button called login, and this is where my paid for subscribers can get into the web portal. But we also have access to the web portal that is complimentary. And so I recommend anybody who's paying attention to this podcast, you come over here. I'll log out and I'll show you what I'm talking about. So you log out, and when you come there, you can actually click right up here where it says sign up and get yourself free access to our web portal. You won't have as many bells and whistles as somebody who has paid for our program, but you will get access to all my white papers. You'll get access to a couple of free courses I've done on selling cash secured puts and things like that. There's a lot of bonus material for somebody who has a free access, and you'll get access to our trading trainer bias, which is really good to check in with. And I'm going to pull that up right, log back in as myself. Now, when I log in, I do have access to all the subscriber information. So like I said, you won't see everything that I've got, but you will see some of this stuff. And one of the things I suggest you go to once you've got your access, and everybody should get access, is this area called stats. And so this is where we keep our trading trainer bias. And you can see right here, I've got this scale right at the top where we keep track of the indexes of, red is bearish, bright green is bullish. We've changed it to neutral bullish, but if we were to have a little indicator, we'd be currently like right here on the cusp. We just crossed into the neutral bullish zone. And that's exactly for what you said. If you come back to the S&P 500 index, we continue to go higher. In fact, we expect that there's this overhead line of ascending resistance, and we're playing with getting right above that level of resistance. Now, support and resistance, when you look at probabilities, when you take your Statistics 101 class and you overlay a bell curve, we would still expect, even though we're a little bit outside of our level of resistance as of yesterday and going into today, we would still expect there's a high probability we'll come right back into this channel. And that would be really healthy for the market to do at this time. So in the beginning now of these summer doldrums, it would actually be pretty good if the market retraced to about, well, let's not give you a rough number. Let's give you an exact number. If I draw a set of my ruler here from the two highs, the two closing highs, if I came down to around 4,230 all the way up to 4,305. So right now would be a good time to pull back to somewhere in that range, 4,230 up to 4,305. That pullback would give us enough like investor confidence in the uptrending trend to give us another push. If we continue higher at this point, SIP, I think that we'll get weak, and then there's less chance of this trend continuing. So right about now, I'd love to see a little bit of a pullback, ideally over 1,270, but I'd say going back as far as 4,230 all the way up to 4,305. Get that pullback and then take another step forward, because what we talked about last week is still true. There is some heavy overhead resistance. If I go back 2 years, there's some heavy overhead resistance at 4,600. And so to get above that 4,600 and start really being in a uptrend for the markets, we need to have some real momentum so we can hit that wall and break through.
Awesome. Love getting the detailed S&P analysis. I do have one question that I brought up early in the show, and that's the quadruple witching. And so on a day like today, what is quadruple witching, and can that have an effect in, the next leg of this S&P journey?
So this all has to do with derivatives, right? Derivatives are futures and options. And so these are agreements or contracts that people make in order to buy or sell stocks or commodities at a future date, right? And it's to lock in a price, right? And so what's happening is these contracts are expiring all on the same date. So it used to be called triple witching. It's now called quadruple witching because, of course, since these exchanges have gone public, they've been wanting to come out with more products that they can sell us investors. And so they come up with different products. So we've got stock options, which always expire on the third Friday of the month. We've got index options. We've got single stock futures, and we've got stock futures, or I think that's the 4 different varieties. And it just so happens that 4 times a year, this being one of them, All 4 of them expire on the same date. Doesn't really, that's mostly about what's been happening in the past, because people make decisions to buy these derivatives in the past, and we're just seeing the culmination of it today. So what we have to know about today is it's not really relevant about the future, right? What's relevant about the future is people who are trading the stocks and options that are going to expire next month or into next quarter. What it's more about is the volume that we're going to see today. The volume that we're going to see today is not going to be the normal organic volume associated with everyday buying and selling. Instead, we're going to see an elevated amount of volume, and you want to know that this is because of quadruple witching, and therefore not counted as volume validation on any sort of pattern that you're seeing. Realize it's kind of artificial volume. It's not organic volume that we're seeing today, and don't count it as reality.
Just a quick follow-up to that. And so because positions are expiring, can one assume that new positions are being put on a similar day, or maybe even like early next week?
Yeah, now's a good time. If you're using, especially with us option traders who use the monthlies, if you're using those monthly options, now's a perfect time. If the signal is there, now would be a great time to sell that premium, buy those options that are expiring next week,
All right.
next month, I should say.
All right, so that's the intro. That's the first segment of the AJ Brown Show. If you're interested in learning more about Trading Trainer, more about options premium, some of these strategies, AJ's got a wonderful workshop that it's a daily workshop where he breaks down this approach. As the headline says, generate serious income like a monthly paycheck parade. And so we're going to throw the link to that in the chat. If you haven't checked it out, head on over there to check it out. If you want to gain access to the portal that AJ was talking about, I believe the link is portal.tradingtrainer.com. We'll go ahead and throw a link to that into the chat as well. We're going to get AJ's pick of the week. We're going to get our trending topic, and we're going to get our speed round. As always, this is live, so if there's a name that you would want AJ to run through, feel free to drop it in the chat. Otherwise, we're going to take a short break, and we'll be back in a few seconds to go over our trending topic. Stick around, folks.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. Head on over there, grab a seat in the webinar, check it out, learn something new. I do have one question before we get into the trending topic, AJ, and that's now that the Fed meeting is over, what's the next consensus? Is everybody thinking that they're going to raise again? Are we still staying in pause? What's the next leg of this look like?
Well, let's take a look at what investors, and this is subject to change. Let's take a look at what investor sentiment is now. So the next meeting is going to be this meeting at the end of July. It says right here, the culmination should be on Wednesday, July 26th. And so right now, they're hinting at a 1/4 point rate hike. So 75% of investors believe that the Fed is going to raise rates another 1/4 point. 25% of investors are saying that the Fed's going to stay still. But you know what? The truth be told is this can change on a dime at any moment. So we'll watch as news unfolds, especially as inflation data comes in. And also, remember, the Fed is watching carefully banks, because all of this tightening is going to put banks into an interesting position. And since the banks haven't, especially smaller banks, they haven't had the oversight to make sure that they can withstand this kind of stuff, There's a lot of focus to make sure that banks don't start failing. And so remember that whole discussion we had a little bit earlier about soft landing versus pulling ourselves into a recession. A recession would not be a good thing across, recessions cost a lot of money. So the Fed is trying to tap dance here. We'll see what happens.
All right. That certainly keeps the interest a little bit higher. Definitely don't know what's going to happen next. We'll keep
Never
an eye
do.
on the economic data. All right, heading into our trending topic of the week. And we'll go ahead and pull it up onto the screen. This
Ah,
week's trending topic question is: how do we determine price lows or highs?
yeah,
I'm sure there's a
right.
variety of tools, a variety of answers.
Well, and the scoop is when it comes to trading directionally, SIP, we want to buy low, sell high, or if we're shorting things, we want to short high and then buy back low. So how do you know when you've got a low? How do you know when you've got a high? What do you how do you do it? When you buy a stock, how do you make sure you're buying it at as low a price as you can?
That's a great question. I believe that my approach is heavily based off of candlestick charts.
Okay.
I'm a big believer in the doji, especially in a downtrend with a doji or an uptrend with a doji. To me, a doji symbolizes that the price tried to move in the opposite direction, but enough buyers came in, but the consensus wasn't followed through. And then maybe applying like a MACD, because I know on the show we always have that cross of the MACD,
Yeah.
which I'm not really sure what it means, but when the two cross, I usually think that that's a good thing, and that's follow through. So that's how I would kind of approach it. And I guess what is your approach? Because you've been doing this a lot longer than I have.
I mean, okay, so pulling it back another layer, if you think about it, there's different ways to look at price action, right? And volume action, I should say. Um, there's fundamentals approach. And so we could look at how a company is doing. That's usually offered during their earnings announcements and any announcements in between their quarterly earnings announcements. So that's fundamentals approach. We could look also at statistics that they keep on companies. Then there's the technicals approach, where we look at actual price and volume and maybe use some indicators. There's pattern approach, where we look at a bunch of bars and see if there's some sort of pattern of investor sentiment. There's a bar approach, where you look at an individual bar. You mentioned a couple of those ways there. First of all, I mean, I like to start with a fundamentals approach, not necessarily to look at not necessarily to decide when the top or bottom is happening, but more to come back and say what sort of stocks are going to be, or ETFs, what sort of stocks or ETFs are going to be easiest to understand when they're about to form a top or a bottom. So I personally like to stay away from like penny stocks, because there's a lot of crazy investors who push penny stocks around. They pump and dump. And to be able to pick that out, I mean, I know there's folks out there who can, just eyeball pump and dump situations and jump on the bandwagon. But I've never been good at that, and I've never honed my skills to be good at that. So I first start with a fundamentals approach, just to find those candidates that are high on my predictability scale. Then, I mean, I love your approach, Sip. You were talking about bar patterns, dojis. Other ones that I use are upside down and right side up Lincoln's hats, which are kind of the same thing. So a doji, for those folks that the thing that Sip was talking about, is where you have something like this right here. You have an open price and you have a closed price that are about the same place. And that usually means that the bulls and the bears throughout the day balanced each other out. And then that usually means that, especially if you can see from previous bars that you're at a top, it usually means that that's done and it's ready to reverse back down. and vice versa. If you see that at the bottom, it means start back up. But a Lincoln's hat is kind of the same thing. It's a doji, but it shows this is an upside down Lincoln's hat, and then this is a right side up Lincoln's hat. It basically shows that, for instance, the bears pushed the price down, and then right before the close, the bulls are on their way back up. So I like that kind of doji bar too. And vice versa for a normal Lincoln's hat. It means that the bulls brought price up in the morning, the bears swatted them back down, and then the next bar, you can continue seeing them down like that. So I love bar patterns. I usually use those as like a source of validation. I like using those technicals. And don't even get me started on the MACD. The MACD is one of my favorite indicators just because I'm a math nerd. And if you think about what the MACD is basically like a speedometer, right? Like it's velocity of price action. So when you see the MACD, and the MACD is this like blue line here, or I guess if you're getting specific, that's the teal line. When you see the MACD above the 0, that means you've got velocity. And when you see it trending up, it means that you've got some acceleration going on there. And so when you have the MACD kind of either crossing the 0 line, which means it's going from being in reverse to going forward, or even better, we put this moving average in there of the velocity line. And so when we cross that moving average, it means that we're really putting our pedal to the metal there. That's a really good sign that you're seeing a reversal in one direction or the other. And so I love the MACD as my primary indicator, and then using something like a price bar pattern, or even a set of bars like that, like you mentioned, candlesticks. There's all sorts of things like shooting stars, and patterns of the like, engulfing candles that can help us determine whether there's a top or a bottom. I guess my approach is using a little of all the different analyses, and if they all line up, I build up this confidence within me that we found a top or a bottom. Another one that I'm really dabbling in, that I haven't quite mastered, but I'd love to master as I get more repetition into it, is actually looking at the volume or the amount of orders. Now that we have NASDAQ level 4 data, we can see limit orders that are being placed. So for instance, if I think that there is a level of resistance at 4,100, I can actually go look at this NASDAQ level 4 data and see how many limit buy orders are piling up at 4,100. This is called quantitative analysis. And what that means is, as price gets down here to 4,100, there's going to be this rash of buying, which would cause price to bounce back up at a bottom. Same with selling. If I saw a whole bunch of limit sell orders at 4,500, I know that when price approaches 4,500 and all those sell orders start popping, price will be peaking and coming back down because of this self-fulfilling prophecy. So I like to look at that quantitative data now, although I have to be honest, I'm not the best at reading it quite yet.
And that approach makes sense, right? Because if the market's moving in the direction and there's a bunch of people waiting there to buy, you're going to need X amount more people to push through that level. So
That's correct.
That's an interesting concept and makes a lot of sense.
Quantitative analysis. I mean, you have to be. These mutual fund, these big fund investors, until recently, with the release of some of this information to investors that want to buy it, these folks like the Fidelity traders and the Schwab traders, all these people that have their own funds, pension funds, hedge funds, mutual funds, they've had access to similar data like this that us little guys have not had access to. They've kind of had a leg up until recently on this kind of data. And they've been able to do that sort of trading. I remember my good friend from college has gotten into the world of being a market mover like that. And I remember visiting him and I was telling him about all the technical analysis that I use. And it almost felt like he thought I was a vampire, and he was putting he's like, oh, technical analysis, that's black magic that we don't ever. And I'm like, well, then how do you determine tops and bottoms? He's like, we just look at how many orders that people are using in the Fidelity ecosphere, how many orders are being placed. And we know that Fidelity, that 30% of all market orders come through Fidelity. So if this mix of market orders is coming through Fidelity, it probably is a similar mix for the other 70%. So we can extrapolate how many orders are being placed at this level, and I can make decisions based on what I know is these levels of resistance based on actual quantitative data. And I'm like, you little jerk, you have access to this stuff. And it just goes to show you that, you know, that old adage that Wall Street is rigged against the little guy, it kind of maybe is, although the technology is allowing that playing field to be leveled quite a bit recently.
Yeah, and we've talked about that a handful of times with the ease of cell phone transactions and brokers, and
And the
even
amount
more.
of data we can get our fingers on these
Sure.
days.
And even more so, I think the benefit to us and the show and our viewers is that placing options trades is now
Mm-hmm.
just as easy. And so, taking this information, taking the learnings, the data, and applying them to positions. And that's why we have the show. That's why you created the program. That's why
Betcha.
that's why you're educating people every day on it. And that's why all week the users are waiting for AJ's pick of the week. What's AJ looking at this week? What's AJ? What positions is he looking to put on? And so let's take all this accumulation of information and let's put it to some use. And let's get into your pick of the week. So how can we utilize options, premium selling to get into a position? And your pick of the week this week is American Airlines, ticker symbol AAL, a name that I feel like we talk about very frequently. What's going on with American this week? Where's the
Well,
opportunity?
and I can just see all of our podcast viewers saying, not this one again. But I'm telling you, this is a great time for American Airlines. We've got so many things that we can do with this guy. So if you take a look at my chart, let me go ahead and squeeze some of these signaling indicators down. Let's just look at the price and volume chart. And I'm at it over the last couple of years. You can see that since about a year ago, this time last year, about the beginning of June, we've been in this kind of sideways choppy pattern with support somewhere around $12 and resistance somewhere up here around $17. And it looks like this is where we're going to be trading. And so we're approaching that $17 zone. Now, if folks out there own some American Airlines stock, or they've got some stock replacement, so they've used some option that would work as the stock, it looks like we're getting to the point where we can sell some call premium and create an income out of this American Airlines. I would say selling the $17 call. Now, notice down here, we just got through talking about the MACD giving us a signal. The MACD has not yet told me that American Airlines has formed a top. And even though I see a little bit of bar patterns maybe showing that, I'm going to use the bar patterns as a validation to the MACD giving me that signal. So I'm going to wait for the MACD first. Then I'm going to look to see if there's bar patterns that agree with that. And if you've got access to that quantitative data, let's look at that $17 zone and see if there's orders piling up there that would create that selling pressure. But once we've identified this top, this would be a perfect time to sell our July option, so near-term option, collect a little bit of premium right now. If I look at that July option, so this is expiring on July 21st, which is the third Friday of July, I could get a whole whopping 55 cents per share for that option right now. That's very good for an underlying symbol that's trading at $16.50. 55 cents is more than 2 or 3% for just being there for the month. So I'm getting ready to sell some call premium. Now, for those of you out there that don't own the stock or don't own a stock replacement, don't fear not. This is a great time if we find that we've got a top to, instead of selling call premium, we could set ourselves up to be selling put premium. And to do that, you short the stock. So we could get ready to short the stock. Again, I'm not going to short anything till I get the signal. But when I get the signal, I could think about shorting the stock. Or if I don't want to short the stock, we could instead use a inverse stock substitute, which is basically geek speak for saying I'm going to buy a far out in time, deep in the money put option, which will act like the stock in reverse. So it'll be like shorting a stock. So I could buy that put or I could short the stock, and then I'll be ready for selling put premium in the future when American Airlines inevitably comes back down.
Question on this, because if it's a name that you continually bring up, is the reason that you do that is because these monthly positions present themselves, and you could
Absolutely.
have a winning month in July and then you could be out. You could have a winning month in August and you can be out.
Absolutely.
That's the concept of the like paycheck, right? That's the premise.
There's these candidates, and people think I'm full of crap, but I literally have been trading the same symbols on and off for like the last 20 years. And that's because once you've got a symbol that goes in these sideways choppy patterns, what makes a underlying company or an ETF, what makes their stock go sideways? The investors. So the investors that are interested in American Airlines are totally fat, dumb, and happy, content with the stock going sideways. They always have been, and they always will be, right? For the foreseeable future. You know, something has to happen to American Airlines in the news to make it go up a step function or down. But left to its own, the investors are just going to keep going sideways. It's one of those companies that's kind of boring. I mean, yeah, they buy planes, they send people around the world, but they're not like a high flyer, and yet they're also not a company that's a flash in the pan. They're just a company that is, right? And so, these are the ones that I'll sell premium on to create income for the rest of my life. And you're going to see them featured here as those great stocks to sell premium on, as long as they're going sideways in a choppy pattern.
And I imagine that the $16 price point also makes it a
Affordable.
very nice option stock price. Or what's the equivalent of the option? How much would an option cost for a $16 stock?
So if I was to want to buy one of those put options now, so I would go pretty far out in time. Here, can I go on a quick tangent?
That's where we got the show.
Folks that I've talked to, and I've done a couple of events over the last weeks, and so I'll get chat questions after the event because I don't know, they think I might know what I'm talking about. And folks who have just started to dabble in options, and what worries me is some folks who it's clear that they're just dabbling will actually come back with quite an ego and tell me that they know everything all about options. And then as I ask them questions, they'll group all calls and group all puts together as if these options behave exactly the same, that all calls act exactly the same and all puts act exactly the same. And that's the farthest thing from the truth, because, depending on the strike price and the expiration of an option, one call option could behave completely different from another call option. So these stock replacement options that I'm talking about are typically options, and it depends on call or put, that are far out in time in expiration. I'm talking 8 months or more before they expire, and very deep in the money. These are going to be options that are close to trading at parity with the stock, and therefore they're going to behave very much like the stock, versus the options that we like to sell When we like to sell options for premium, specifically time decay premium or theta decay optimized premium, these are options that would be near term at the money that are not influenced so much like a stock replacement, but instead are more influenced on the fear and greed of the market as well as time passing by. So depending on the expiration date and whether you're at the money, out of the money, or in the money, the options can be completely different. And if your group calls together and all puts together as if they behave the same, you have some learning. You need to come talk to us because we'll get you gigged up and trading the right thing.
All right. Well, in AJ's Pick of the Week, we go over what AJ likes, but that doesn't mean that our viewers and users don't have good picks for themselves, which is why we have our speed round. And some of the names, there's going to be opportunities, and some there aren't. But we like to go into the analysis in real time and take a look. And so now is time for our speed round, and we've got some pretty notable names to go over. So let's get right into it. And the first
I didn't answer your question. You asked how much is substitute put going for. I'd use this $20 strike price expiring in November. I wouldn't mind using that. It's not quite trading at parity, but it's deep enough for what I've got in mind. There's a little bit of liquidity going on. It's only $3.65 roughly, $3.70, something like that. Okay.
So $360, right, to take on one position
for one
roughly.
contract. Yeah.
Right.
Yeah.
Versus
instead of shorting the $16,
which would be like 1,600 minimum, right? Yeah. So that's basically the premise of the power of options is this leverage component. Yeah.
Yeah. All right. Sorry.
We've got some other names that we got to get through. All right. And first, we're going to head on south, and we're going to hear from John in Austin, Texas, who wants to know more about a name that's been in the news, I feel like, a lot recently, and that's Ford, ticker symbol F, the classic car manufacturer.
Did you hear that Tesla is in bed with Ford now on the charging network?
I mean, it's good for Tesla, and I think it's good for electric car users at the end of the day.
Yeah, I think it's good for Elon too. I think Elon has tapped into some of this government money. So the government has been subsidizing or dangling a lot of taxpayer money in front of car makers to kind of speed up the adoption of EVs. And one of those components is, can you provide your car purchasers with a charging network? And Tesla, Elon upfronted a whole bunch of money, and Tesla has charging networks all over the place. And so basically Elon's saying, hey, I'll make you comply so that you can get a whole bunch of money from the government without you actually having to build these networks, by letting you use ours at a fee. And that way Elon can tap into that government money through Ford. And then I heard that Elon has courted GM as well, and GM signed on to the deal. So now Elon's getting all this government money that was slated for Ford and slated for GM. He's getting a share of all of that. And I just read yesterday that now he's trying to court Toyota as well. So that's Elon. I mean, despite sometimes being a quack and taking Twitter, and perhaps some people are questioning Twitter's validity these days, he does have some smart money-making ideas. I mean, PayPal was a great idea. Tesla, great idea. A lot of these things. SpaceX, I mean, NASA's going with SpaceX on almost everything. So the guy's got some smarts.
And so the question is, AJ, is there a way for us to make some money off of Ford, given that knowledge, that information that we just discussed?
Good thing you keep me on track there. I wonder as well, I've been featuring Ford in my speaking events. So I wonder if John from Austin was at one of my speaking events. So Ford is going up. It hasn't given us a signal. It would be not unbelievable, since Ford is at a level of resistance, just like American Airlines, for us to get some sort of top forming here. A signal on Ford, just like I haven't gotten a signal on American Airlines, but I wouldn't be surprised if sometime early next week both of these symbols go. So same advice on Ford that I gave on my American Airlines would be own Ford stock. If you own Ford call options that are deep in the money, far out in time, now's the time to be getting ready to sell your premium. And so if we look at the Ford July options, they're trading every dollar. So we're thinking about the $15 call. I mean, you could get an easy $300 per contract for every contract you sell of these $15 calls, which is not bad at all. Not as good, I have to say, it's not as good as the American Airline premium, but it's up there. And so you might consider getting ready to sell some call premium. The other thing that you could do is if you're not in that initial covering position, then we can get ready to bet against Ford, short the stock, or buy some deep in the money, far out in time put options so that we can be ready to sell some put premium when Ford indubitably comes back down to about $11. So either one of those strategies, I think you're on the right call. The key for both of these tickers, American Airlines and Ford, is to wait for the signal. Be patient.
Yep. Also, another very reasonably priced ticker symbol. So, thank you, John, for bringing that one up. Heading to the heartland of America, and that is Madison, Wisconsin. This is Sarah, interested in a very popular entertainment name, an expensive stock, I think, and that's Disney.
Yeah. Okay. Disney's in the news, as we know, for specifically Disney World in Florida. I don't think that's that big a deal because Disney is so much more. Disney's, a production place for media. Disney has theme parks all over the world. So,
Sports.
Disney has sports. I think there's a little bit of Disney and Hulu, did a little bit of Disney and ESPN as well as far as content providers. One thing that we are always talking big picture when we talk about the price of stocks. And one thing I want folks to understand is it's not necessarily the price of the stock that is our big problem with the size of our portfolio, but it's the risk involved. So when we size portfolio positions, we size them not based on the stock price or based on the option price, but we size it based on how much risk we'll be taking on if we get into this position. And so as a general concept, the higher the price of the stock, the more risk you might take on, which is why we might consider needing a bigger portfolio to spread out that risk. But that's a generic kind of general ideology. My program participants, we meet every Thursday and do, subscriber. We actually plan out trades together, and then we all go out and trade these planned out trades. And they have proven to me a couple times now in a row that even these expensive stocks can be affordable with people with small portfolios because of their limited risk. So if we put a protective put in place that has a strike price that doesn't allow much risk, we can actually get ourselves into these more expensive with a smaller portfolio. Now, nothing comes for free. Those protective options that limit risk at that level, they tend to be pretty freaking pricey. So you have to make sure you have some cash on the side to buy those protective options. But it makes it possible for us to get into these expensive stocks. So make sure, that's a lot of word salad to just say, make sure you have evaluated the worst case scenario risk and made sure that that risk that you could see in the worst case scenario is something your portfolio can absorb without putting you over the edge. Now, with all that said, I think Disney's at a place where you might want to start acquiring it. You might want to buy some stock in full understanding that in the future you might want to sell call premium against it. And one of the ways that I like to acquire stock is not with a limit buy order. I hate limit buy orders because there's no reason behind them when you can instead sell puts, cash secured puts. And the reason why I prefer cash secured puts over limit buy orders is because in a cash secured put, it is a limit buy order, but you get paid for it. So if you're going to put a limit buy order, sell a cash secured put instead and get paid for it. That way, if the order doesn't go through, you still walk away with some premium. Say, for instance, SIP, I want to buy this Disney at $85. Well, what I'll do is I'll come over here and sell the July $85 put. If I sell this, I'm going to get $700 for every contract I sell. And now I've got a standing order in place to buy it at $85. But I got to walk away with $700 per contract. And if nobody decides to sell it to me for $85, I still get to keep that $700. So why wouldn't people do it this way? I don't know.
Yeah. Well, that's why we have the show, and that's why you have your program so that people can learn how to do it. And definitely, if you're going to be taking a long view position, you want to get in at a price that you think has value, and this is definitely one of those approaches. So
yeah, I think Disney's a good stock to do this with.
So there you go, Disney. I hope that answered gave you a little bit of insight, Sarah. Moving on to our third and final name in our speed round. This is Mike from Boulder, Colorado. Interested in a hot sizzling AI name, and that's Hound AI, ticker symbol SOUN.
Yeah, this is new to me. AI in the news, so we got to watch out for that. Company isn't quite established yet. You can see that because if we take a look at their earnings, they haven't yet been able to break even or make money, at least over the last year. But their symbol is very affordable, right? $3.50. It's in this sideways choppy pattern. I don't know how easy it will be to determine when we're at highs and lows, but you could probably sort of wing it. And it's so cheap. If you keep your position size small, it could be a fun symbol to go up against. I don't know if I'd put a big portion of my portfolio into it or not. Let me just second and look over here at the options chain and see if people are trading it. And indeed, there's a whole bunch of people, open interest, volume, small bid-ask spread on both the call and the put side. There are folks who are very much interested. Let me look at an option that I would use as a protective option, like the October expiration. Yeah, there's people trading the October expiration too. So we don't have to worry so much about there being liquidity in the option chain. So yeah, we could totally sell this as a premium position. I think we missed our opportunity to get into initial covering position unless you bought some of this stock down at around $2.50. But if you didn't, I would actually wait for this thing to top out. I don't know if it's going to top out sooner or later. It hasn't given me a signal that a top has been found. But once it tops out, especially if it tops out anywhere from $4.50 or lower, once it tops out, I think that I would consider shorting this stock or buying some put substitute options. And then after I have done that, when it comes back down to the $2.50 range, I think I would then think about selling some put premium. And that way I would have a nice trade in place, create some income. And if I short it and instead it comes all the way down to $1 or 50 cents like it did back in the beginning of this 2023, I'll just buy to close and take that money and run. So I think that's where I would be with this particular one. Again, not putting a lot of my portfolio. This would be more of a fun position to trade.
Yeah, and I had to look into a little bit about what they actually do, and it
Yeah, what
sounds
is it?
like they're like an AI answering service for restaurants. So like calling about reservations, maybe placing orders, uh, using AI. I think there's some innovation there. So very interesting name, and thank you, Mike, for bringing that one up. We'll definitely keep an eye on that. I think that there's a lot of demand for AI names, especially from investors these days. So we'll put this one on the watch list. All right. Well, that's close to the end of our show there. We do want to remind everyone real quick that AJ has a one-on-one trading program, which we'll go ahead and pull up onto the screen here. So if you're looking for a little bit more hands-on training, then head on over to what is it? tradingtrader.com/apply-for-coaching. We'll go ahead and put the link into the chat. We'll go ahead and put it up on the screen as well. Yeah, if you like what you're seeing, if you want to learn more, if you want to have a little bit more hands-on training, head on over there. I know that the program's recently been revamped. There's some new members. There's some new coaches. Things are growing very quickly. So if you want to learn more, head on over to the link, schedule a 10-15-minute conversation with someone on this team and get your questions answered and see if it's something that's good for you. I know that, some people like to learn in a group. Some people like to learn alone. Some people need the one-on-one. This is one of those options that gives you the ability to learn with an expert, learn with a team that's been doing this for almost 20 years, over 20 years, or we're getting close to the 20-year anniversary. All right, AJ, anything you want to add on that? No, we're
No, I
good.
think
Great.
that get yourself a no obligation discussion. No obligation means no obligation, because in reality, if you get on the phone with one of us, we're also finding out if you a good fit. We've actually turned quite a few people away because they don't have their goals in order, or they don't have what's necessary to do it. So it's a feeling out for both of us. It's not just you interviewing us. So we'd love to get you on the line. There's no obligation to see if we might be able to do something together.
Awesome. So the link is in the chat. Head on over there. Heading into the weekend, AJ, anything we should be keeping an eye on? What's going to be the topic next week?
Well, I think that next week is going to be, again, maybe turning our attention towards the next Fed meeting. I think as well, we're getting into those summer doldrums. So people are going to, especially with this Father's Day weekend, a lot of people are going to be starting with their picnics and starting with longer vacations. So we're going to probably see a slowdown in the market, which is perfect for us premium sellers. So get that July premium sold. If you've got initial covering positions in place, let's look for those signals over the next weeks, and let's get that July premium sold.
Awesome. And happy Father's Day to you. I know that it's the second Father's Day for you. So congratulations,
Yeah,
and congratulations to all the other fathers out there.
we're heading up to New York City tomorrow morning. We're going to go up there. My wife and I have been fans. We're not anymore because the show's over, but we were fans of this Miss Maisel show.
Oh, Barbara
So
Maisel, yeah.
yeah. It's just it was silly kind of quips, but I guess the lead actor is performing on Broadway, so we got tickets to go see her perform across from Oscar Isaac. He's also a pretty cool actor, so we're going to see those two on something, and then on Sunday we've got tickets to an annual kind of Broadway Bears kind of burling going on there for charity. So we'll go check that out, and we'll be back on Monday morning. here in the Washington, D.C. office of Trading Trainer.
There you go. A nice little weekend excursion to the Big Apple for Father's Day. Can't go wrong with that.
That's right.
All right, folks. That's gonna do it for us. If you've enjoyed the broadcast and you've become a fan, hit that like, hit that follow, hit that subscribe button. Tell your mom, tell your dad, tell your grandma, tell your sister, tell your dog. Let them know. AJ Brown Show broadcasting every Friday. AJ,
Woof woof.
thank you for your time. Everybody else, thank you for tuning in. We'll catch you guys next week.
Bye, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.